You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, let's find out together, shall we? Because it is time once again for TWIFO, This Week in Futures Options, the program where the name says it all. We break down the week that was and indeed still is from a futures options trades and trending and analysis and unusual activity perspectives. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks have been enjoying throughout the week. Go ahead, enjoy. There's more bandwidth where that came from. Remember, if you like what you hear, this show, anything else, throw a like, a star, a comment, a rating, a review on whatever platform you get it on. It's available on pretty much all of them. All that stuff in aggregate does help new people continue to discover the content. And if you too want to discover new content in your lives, theoptionsinsider.com/pro, the place to go to learn more for you cool kids, you handful of kids who can handle it, /secret club. As we look to see who's joining us on the old CME Group Hot Seat today, I am pleased to welcome back our old friend, now the man who runs the Investment Management Academy over there, as well as the Derivatives and Trading Academy. He's got many hats he wears over there. Mr. Rich Excell from the University of Illinois. Mr. Rich, welcome back to the show, sir.
Mark, thanks for having me. I really appreciate it. I hope, talk about U of I. I'm here towards the end of my summer as I'm gearing up for school, but I know there's still a lot left for everybody else. And like you said, a lot of things to enjoy, including good trading in the markets. And of course, Bears football coming tonight.
Yeah, they're popping off the season tonight. That's right. How are things in the Derivatives Trading Academy out there? Sounds like things are off to a robust start, sir.
Yeah, they definitely are. Oversubscribed from the students. I knew there'd be a lot of interest from the students. And as I'm talking to different companies in the marketplace, et cetera, I'm pretty excited to engage with the students who have both quantitative skills and some good markets understanding as well. So really, I'm really excited to get the the semester started off with something new because I think it's going to be a good niche to fill for both students and employers.
I'm glad to see that you're offering those sorts of classes. I had to go take those in the graduate school when I was an undergrad, and it was very basic. Just here's the options class. I think it was actually called the derivatives class at the time. So it was all lumped together, futures and options. But I'm glad to see you're offering that to a wider swath of students, and glad to see they're taking you up on it. It's a hot time to be an options trader as we keep on rolling right on into the movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show where we break down everything, lighting it up to the light side and to the dark side over there at CME Group this week. You can see this report for yourselves. If you follow us at Options on Twitter, you follow CME. We both tweeted out right before showtime. And as of the start of the show, it was looking like a pretty even week out there, roughly 50-50 red versus green out here. Slight weight to larger percentage movers on the dark side. I wonder if we re-racked these now, just given how aggressive the sell-off has been in the equity sector today, if maybe some of these light side movers on the week in the equity space would be a wee bit lower, might be a little bit different. So it might be a little bit more biased to the red right now. But as of report time earlier this morning, it was pretty much 50-50 out there on the week. So, Mr. Rich, I know it's been a little bit since you've been on the show, but I think you remember how this works. Think you can handle a little run through the light side and the dark side this week, sir?
No, definitely. I think I remember how this goes. And I think I'm going to start on the light side this week because, as you say, today's a pretty ugly day out there, and we'll see how we end up the week. But it had been looking pretty balanced, and now it's starting to get a little bit uglier. So let's start on the light side. And number 5 in the light side is gold. Interesting talking to people, some people this week, they look at the macro world and, there's bombs going off literally all over the world, and equity markets didn't seem to care. The only thing that seemed to care was gold. So not surprised to see gold up so sharply. It was number 4 to the dark side last week. So it's really just kind of getting back what it did last week. But that's one where that flight to safety certainly seems to be a little bit of a beneficiary. Number 4 on the light side is the Ultra 30-year. There's a lot of duration in the Ultra 30-year, and that's the place where you want to be in the bond market, with everyone seeing the Fed as being pretty dovish here and pricing in more than one rate cut. I've heard a lot of people talking about even the possibility of 50 basis points now in September. So the bond market is getting pretty dovish, and you want to own duration when the bond market gets dovish, and what better place than the Ultra 30-year? Then, of course, we're in the middle of earnings season, and so what better place to go than the equities sectors, which are in the top 3 categories on the light side. In number 3, we have the real estate sector, up 3.85%, similar to the Ultra 30-year. As we just said, rates look like they're heading lower. What better beneficiary than the real estate sector, which has been a little bit a source of where people thought there might be some problems creeping in. We haven't necessarily seen as many problems as expected, and lower rates are definitely going to give a little bit of a tailwind to that sector. So maybe that's the first move of many to the upside or the light side for the real estate sector. Number 2 is the utility sector. Everyone's new favorite AI play, the utility sector, because of course AI needs power, and who generates the power but the utilities. A lot of these are not just regulated, but these are also independent power producers. And I don't know if you saw, Mark, but big news yesterday in the power space was there was a PJM auction which is the biggest area, the biggest independent power area in the country at 65 million consumers, and the prices they will be getting for the next year are up tenfold from where they were in the past year. And that is largely driven by the demand that we are seeing for AI, data centers, et cetera. And so utility sector, definitely one in focus in the equity markets. And then, of course, number 1 on the light side is the communications sector. The Mag 7 names, we have a number of Mag 7 names in the communication sector, AI, et cetera. That's definitely where people want to focus when they get a little bit excited. And that's what we're seeing on the light side, up 5.18% in communications and up 4% in the utilities. So that's the light side. But now let's move to the dark side. On the dark side, in number 5, well, always a volatile name, always a volatile asset. We've got Bitcoin down 3% on the dark side. Bitcoin's been a little bit all over the shop. I talk about the Bitcoin in my Excel with options. There's been a bit of a range of emotions where people were worried about the Mt. Gox settlement, but then all of a sudden, Canada President Trump was at Nashville, so it's been a little bit volatile. And on the week, in the dark side, down 3% is Bitcoin. And then as we look to the dark side, we see a trend here. As anyone who's been involved in the soybean market knows, it's been a pretty horrific time in the soybean market. As we're not export sales have been collapsing. The weather is such that we think yields are going to be pretty strong for soybeans, and this is really putting a lot of pressure in the entire complex. Number 4 to the downside is soybean meal, down 3.77% on the week. It was actually number 1 to the light side last week. A little bit of a relief rally. It was up 5.33%, but that downtrend in soybeans has continued, and meal is down 3.77%. Getting dragged along in there is where markets worried that farmers are still long corn, and corn was down 5.41% on the dark side this week. It was number 3 on the light side last week, up a little over 4%. Again, yields look to be pretty strong when we get the USDA numbers, and the weather has been such that we're expecting good yields, and there's just not enough demand out there. And so the corn and soybeans are getting crushed. Soybeans themselves down 5.88% on the dark side. They are number 4 to the light side last week, but this has been trending lower for quite some time. Both corn and soybeans have been heading lower for certainly all of this year. And then number 1 to the dark side is soybean oil. So we see a trend there. The entire crush is getting crushed, if you will, down 6.45%. Number 1 in the dark side is soybean oil. So I'll pass it back to you, Mark. But it's a pretty ugly market in ags for sure. And until today, a pretty good looking market in the equities.
Yeah, a lot to break down there. Let's get out here now into the CVOL, listeners, which you can find for yourselves. Just type CME and CVOL, CVOL, into whatever browser you use. It'll get you right to the CVOL dashboard. And then from there, sort it, listeners, go to the 1 week high-low range. This is the This Week in Options, after all, futures options. So we're going to go back 1 week. You're going to go for an ordered list. Now, when you do that, it's going to order it by today's move. That's why we have the order that we do. But if you look at the high-low range, that'll give you the week's worth of action out here right now. And at the top of the list right now, not surprising perhaps, is the energy complex, 52.40, up 1.5 points. Also, pretty much everything for this week, with the exception of the bottom 2, and they're all in the same complex. And I'm guessing you can guess which one it is. Everything this week is pinning the needle pretty much for its weekly range in the CVOL, except for 2. And they're all in the same complex. And you guess which complex is burying the needle the other way to the bottom end of their weekly range? I'll give you a hint. They had a big event this week. All right, energy, number 1 here this week to the top here, 52.40. Again, pinning the needle for the week. The low was 49.62. That came earlier this week. Right below it, we have the commodities aggregate CVOL. That's at a 34.88, up about 1.25 points today. And on the week, again, pinning the needle to the upside for the week. The low was 33.02. That came last week. Below that, we have the metals CVOL at an 18.49. That's up nearly a full point, 0.95. So no small move out there for the metals vol this week, and indeed today. And on the week, again, the low was 16.76 last week. The high, 18.49 right now. So another one pinning the needle, listeners. Then we have the ag products, the aggregate ag CVOL. Rich was just talking about ags out there. 21.78 is where the ag CVOL is trading right now. Up only 0.11 today, but on the week, it is pinning the needle again right now at the high for the week. The low was 20.92 that came at the beginning of the week. Then we go to Rich's other stomping grounds, FX. The FX CVOL, 6.35, off about 0.07 today, and the low came about 6.08 last week. Again, another one that's pretty much at the high for the week. And then below that, we have the 2. Did you guess which 2 were pinning the needle the other way to the downside this week, listeners? Yeah, it's the treasuries. Treasury price vol and yield vol, both at their low end for the week. Treasury price vol, we'll go there first, 6.25, off about 1/4 point. So a fairly large move for price vol. Again, that's going to happen when the Fed pops off during the week, listeners. The high was 6.55, obviously heading into the Fed. And below that, we have the Treasury yield vol at a 111.80. That's at the low for the week. The high was 116.18. Again, heading into the Fed. Rich, as I was breaking down all of that CVOL, anything catching your eye? Any surprises out there, sir?
Well, you mentioned the ags. I mean, the ags obviously at the high end of the week. I think the one thing that might be surprising is that if you've been looking at the short base, is the levered money, the professional money has been short corn and soybeans. So it's definitely been moving in their favor. So I think we're still starting to get in maybe in uncharted territory. So a little bit surprised to see that pinned at the high end. But I think when you look at the commodities broadly, and the metals, all of which are kind of frankly signaling recession right now, that doesn't surprise me at all to see those at the top end of the band, because we're starting to really kind of break down again. And I think people are getting a little bit nervous that maybe we'll break down faster than we thought we were.
They're signaling recession, hashtag recession, trending right now on Twitter. Rich, always a good sign, right? as we kick off the show, you mentioned it earlier. It is number 5 to the dark side this week. It is Bitcoin. So let's kick it off in crypto.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, listeners, to the Rock'em Sock'em Robots world of crypto. If you've been listening to our Crypto Rundown show, which, again, if you're intrigued by crypto, you should be. It's every Monday, and it's after the option block, and it's a whole hour pretty much of all of this. Crypto vol, crypto skew, unusual activity, all sorts of fun. Coming in to start the show right now, Bitcoin taking a bit of a hiatus, 63,540, off 7.6% or about 52.35 in terms of handles to the dark side just this week. Of course, you go back to the end of our show last week, it's only off about 3%, but still a volatile week out there in terms of movements out there. So interesting stuff. Of course, a lot going on the ETH front. The new ETH ETFs finally getting listed. That's kind of been the rising tide that lifted all crypto boats over the last couple of weeks. Seems like maybe we're coming back down the other side of that now. But Rich, one of the reasons we wanted to start in crypto this week is because that is the subject of your Excell with options right now, trading the ETH Bitcoin spread in a year of catalysts for crypto prices, sir. So break down your analysis for our listeners, sir. And you always come armed with some intriguing trades. What's your trade out there in the crypto space right now?
Yeah, I'm always trying to push the envelope of what's possible, of what we should be thinking about, or what we could maybe consider as a way to express our views. And Mark, you were touching a lot about the different catalysts that we've seen this year in the crypto space, right? We started the year with Bitcoin ETFs and saw massive flows, record flows into Bitcoin ETFs. And then we've seen, now we've got the ETH ETF coming out. And so I was just looking and saying, I started by saying, okay, well, what's been the price action in Bitcoin, and what should we or could we expect in ETH as a result? And so I looked at both Bitcoin. I'm looking at the generic front month futures, like look at what Bitcoin did, and then lag the ETH futures a little bit and say, did they, will they respond? Will ETH respond the way Bitcoin did earlier this year, or is it already being priced in, et cetera? And then looking then at the, in some ways it looked like ETH was already starting to move a little bit in that direction, kind of anticipating that this was going to be the next shoe to drop. But even that said, if you look at the relative spread of prices between Bitcoin and ETH, and if you look at them even one to one, which may not be the perfect way to do it because people want to do it dollar neutral, but then look at it on a dollar neutral basis, which was about 15 to 1. What you see is that these really basically traded around a spread of about 0 on a ratioed basis until about the end of last year. And since from the end of last year, of course, the run up into the Bitcoin catalyst, and then through this year, we've seen a pretty big relative drawdown, that is, between ETH and ETH relative to Bitcoin, such that when we look over the last 3 years of price action, and look at the mean of that and where we are, we're over 1.5 standard deviations cheap. And so this kind of suggests that even if I think the ETH catalyst might be priced in a little bit, because frankly, the Bitcoin, while the flows were big, the price action has been, basically we're hanging out right about where people are long on average. Is there something to do here? Just because the relative prices have gotten a little bit disconnected. And so then, of course, you look into the options market and say, what's going on in the options market, and so you see that the implied volatility spread between Bitcoin and ETH. You actually you see ETH vol is up about has about 12-point premium to Bitcoin. And so I'm looking at these things and I'm saying, okay, there might be a trade here. Is there anything else kind of going on in ETH? And then you see that besides the ETF catalyst, we had a Denkun upgrade. There's a hard fork on that chain. Again, we're just trying to improve the speed, et cetera. And with everyone focused on AI and the fact that we've now had this hard fork that is improving the speed, there's a lot more usability in ETH, and you see that in the gas prices, which are really kind of at the year's lows right now, suggesting this upgrade has really somewhat worked. I'm saying, okay, well, maybe on a relative basis, because if you looked at price action, if I look at the descending triangle in the relative price, or look at that SD move in the relative price, or if I look at the charts in each of them, you get a little bit more relatively bullish ETH than Bitcoin, but it's not one where you're just like, okay, I'll just go buy ETH, because the chart itself wasn't looking particularly great, but the relative price chart looked a lot better. And so as I looked then and said, okay, well, there's a premium to ETH vol versus Bitcoin, but I would rather be long ETH than Bitcoin on a relative basis. That's where I said, okay, well, maybe I want to consider doing a relative option trade as well. And so I looked through the vol surface and looked at the different expirations and the different deltas that are out there, and settled on looking at a relative put trade where I got long Bitcoin puts and I got short ETH puts. And the idea being here that I think on any move, I'm taking in premium to do this, even if I'm doing it on a ratio basis. If both of them move higher, I've taken in some premium because I've gotten a 12-point vol premium because I did it in a way where I could take in some premium. If everything moves higher, I'm going to take in a little bit of premium. If nothing happens, again, I take in a little bit of premium. And if things break down, I think given that relative price action, Bitcoin should break down more so than ETH, and so I could potentially benefit on the downside because of where the relative prices had set up. Of course, you always have to look, and if ETH goes down faster than Bitcoin on the downside, that's the risk in looking at that type of idea. But really, it kind of comes down to what are the catalysts, what's the market pricing in. What's been the relative price action of the two underlying futures, and then what are the volatility markets giving us here? And to me, it lined up as a better relative trade on both the directional and volatility basis than it did as any sort of outright trade. And so that's why I looked to do that kind of Bitcoin ETH spread in the Excell with options this past time.
I like that, sir. A little Bitcoin versus ETH, because you're right. Some very different catalysts driving both of those right now. Again, if you're intrigued by all that, listeners, check out our crypto rundown program. If you're subscribed to the full network, you're getting it already. If you're not, what are you doing? If you're just listening to TWIFO, you're missing out on a whole bunch of other great content. Right now, looking at the CME big Bitcoin options, they were actually decently active this week, a little over 1,000, about 1,100 contracts. Doesn't sound like a lot, and it's not 3-month SOFR or the E-mini, but for Bitcoin, it's actually a decent week out here, and looks like about 2/3 of that going up in the August contract that has about 30 days to go, 29 days to go. So we're going to hang out there, listeners. What is the vol in August? Bitcoin 47.25, off about 13 points. So vol coming in this week, which is kind of interesting. You also see that in the skew. Bitcoin is one of the other assets. We were just asked recently about assets where collars could be effective. And those are usually assets where the calls are bid from a skew perspective and the puts are offered. So not equities, but ags can fall into that sometimes. Metals, definitely. And Bitcoin and crypto are other ones where usually the bid is to the upside. That is the case right now, even if it is a little bit muted compared to what it has been in the past. Last week, the puts were about flat, and this week they're about 2.3% cheap. Last week, the calls 1.7% bid. This week, about 4.3% bid. So calls ticking up a little bit out there, but again, not as rich as we have seen it out in the past, which maybe shows you, given the fact that we're selling off and we kind of faded off the highs out there. Maybe the bulls are a little spent for the near term out here. And speaking of spent to the upside, that's what our number one most active contract was out here in the big Bitcoin options this week, listeners. It was the 70,000 calls in August, going up a little over 200 times. Most of that today, 150 today. People were closing all week long, though, including a 50 lot on Tuesday. And there's about 173 open, so it seems like folks are bailing on the 70,000 calls in August, which is probably also why that call bid is a little bit muted out there. And then we also looks like we had a bit of a roll down from the 85,000s down to the 80,000s on Monday, about 100 times. And that accounts for most of their paper there as well. So it seems like if there is a tale to be told this week out here in Bitcoin options on CME, it is folks giving up on the upside, at least for right now. But we're not giving up on you, listeners, not by a long shot. As we keep on rolling into our next segment, it is time to explore the wild world of energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody. Welcome to the wild world of energy. Go into that drop down. By the way, I neglected to mention it, of course, for crypto. CMEgroup.com/TWIFO is the place you want to go to get access to these reports. Then you go into that asset class drop down. Crypto is 2 down from the top. Energy is 3 down from the top. And then we didn't see it, interestingly enough. It is net close to flat on the week, but we are seeing a lot of interest, a lot of mind share currently right now with all the headlines going on out there in energy, particular WTI and crude. So we're going to hang out there. I know also, Rich, you recently wrote up an interesting piece about the impact of weather on crude oil supply and demand as well. So let's start there before we get into all the modern hubbub going on out there in crude oil. What caught your eye in terms of the impact of weather on crude, sir?
Yeah, for sure, Mark. So this one piece was out about a month ago, a little less than a month ago, and at that time we had, if you can remember, Hurricane Beryl coming down onto the Gulf Coast and into Texas, and even we get some ramifications of that up in the Midwest with all the tornadoes that came through Chicago. And it was an early, it was obviously an extreme weather event, but it was one where the hurricane season, which we always expect coming in towards the end of August, September, maybe even in October, was starting in July is much earlier than expected. And if looking at the weather researchers, the weather forecasters, they're suggesting a more active than normal hurricane season in the Gulf. And as we know, I start out by looking at the oil supply and demand. There's nothing where the data is more clear and it's driven more clearly by supply and demand than, I mean, of course, all commodities are, but oil is. And when we, when you get a dislocation by more than 1.5% on either side, either supply or demand, you see impact on prices. And so if we're going to see a more volatile hurricane season in the Gulf, this had the potential of impacting supply, which should potentially drive prices higher. They at the time, if we remember back about a month, they were breaking out a little bit to the upside, and so I'm like, okay, well, it looks like it could be something that would be bullish for prices. The prices look to be breaking out, but then I dug in a little bit further, and what I saw was that it seemed like traders were potentially already kind of positioning for this. Looking at the commitment to traders, et cetera. The report showed that the length was being added into the system, et cetera. And also when I looked at that, even back then, the CVOL was a little bit high, and the particularly high with upside options being bought. The UpVar, if you look at CVOL, you can see UpVar and DownVar, and not just the CVOL index, which looks at all strikes, and see that there was the demand that was coming in for the vol was coming in for the upside. And so my sense was that people were positioning for maybe a potential bullish breakout in oil. And so while, I was seeing this kind of weather potential catalyst as something that could take oil higher, it also felt like maybe this is getting priced in. And so what I looked to do is said, okay, well, the CVOL was kind of at the top end. And so I wanted to get short some volatility. But of course, there's we have to think about kind of protecting that. So I'm like, I'm going to look at I looked at an iron butterfly. I actually looked at a call butterfly. Looked at the 81, 82.5, 84, which was a little bit higher than where the futures were at the time, saying, okay, we might get this move higher, but given the length that had already been added in, I'm going to look at this kind of call fly and just essentially put this on, saying, okay, if we do get a move, we'll kind of drift a little bit higher. It ended up kind of working out that way, because by the end of when the July futures expired, I think it was right around 82 or a little over 82. So it was pretty close to the mid strike. But it was one of those where, even though you have the news that where you get a sense of what prices could do. If you see what the positioning is, sometimes you say, well, maybe that's already been priced in, so maybe that move is going to be a lot more muted. And then I thought the vol market was giving me the opportunity to get short. Of course, trying to kind of cover the tails, if you will, on that short vol, and put on a fly. And flies can always be useful in that sort of situation.
Interesting. Now, you mentioned the impact of the weather. That was the big catalyst I just said about a month ago. Of course, right now we're seeing some more catalysts at play, and that's the other side of the crude oil coin, which is the geopolitical factor that is playing out right now. Of course, the ever-looming specter of perhaps a spreading conflict, a widening conflict over there in the Middle East. So has that recent catalyst, has that caused any changes to your now, maybe a new trade you have on in light of what's going on right now, sir?
Yeah, I totally agree with you there. I mean, it's clearly it's Middle East absolutely seeing escalation happening right now, right? We're seeing escalation happening in Ukraine and Russia, and we can expect that to happen as fighting will intensify before we get into the winter, when we'll probably stop fighting, or at least the ground war will stop. And then throw in the what's going on in Venezuela. People can't forget that Venezuela also supplies a lot of oil to the market. You look at some of the biggest oil producing regions, and there's conflict going on, and you have to think that there's going to be supply disruptions, and you don't seem to see that in the price. And so I think looking at some bullish upside ideas in the options market can definitely make sense, because this is one where if any one of these plays out the way we think it could, and I know people are conditioned to say every time there's geopolitics, you want to fade the move in oil. I get that, and that's clearly what seemed to have happened in the last 9 months or so. But heck, I mean, these are some major conflicts in the major oil producing regions. Any one of them gets out of control, and you would think that that's going to be a pretty big supply disruption.
Speaking of buying upside, that's exactly what we saw, at least in terms of analysis. A lot of people looking at this Bloomberg article just came out, I believe, yesterday or this morning even. They're talking about Brent, saying they're seeing a lot of upside call buying in Brent, particularly in November with Brent in the low 80s, high 70s. People loading up on the calls ranging from 110 all the way up to 130 by November. That would certainly be a hell of a spike out there in Brent. And we all know, whither goes Brent, so goes WTI. So let's go out there right now, listeners. Was it an active week? I mean, underlying wise, it wasn't. Surprisingly, a flat week here. We had some movements, but net, we're only moving about a percent right now on the week out there in WTI. So underlying wise, it wasn't. Volume wise, though, WTI come into play this week, 762,000. So closing in on 750,000 contracts. That's roughly 300,000+ more than we would expect at this time of week. So a pretty active week. Again, those catalysts, those geopolitical catalysts we were just talking about, those usually tend to deliver on the volume side. And almost half of that paper right now, 45.6% going up in the September contract, has only about 2 weeks to go out there. So a near dated contract, again, people focusing on the near term, given what's going on out there, makes a certain amount of sense. What is the vol in September crude, you might be asking? It's about a 31, ticking up nearly 5 points this week, about 5.1 handles this week. So that's a pretty decent vol move out there in WTI. And also, compared to a lot of the products we're going to talk about on the show, a vol of 31 is nothing to sneeze at. You got to go to crypto or really nat gas or maybe some of the ags on occasions to really find vol levels that are higher than that. Most things we're going to talk about, look at VIX right now, was at a 12, threatening an 18, 19 right now, given today's sell-off. So rallying a little bit, but broad equity vol certainly nowhere near about a 31. So looking pretty frothy out here. And so is the skew, or at least I should say the skew was looking frothy a week ago. It seems like we were pricing in the expectation of something popping off this week, because we had the puts were 21.2% bid. That is an aggressive bid for the puts. They have now come in about half of that. They're about 11.8% bid. So still juicy, but roughly half of what they were a week ago. The calls last week were 12.4% bid as well. So we had a crazy bid to both wings last week. So people were expecting something to pop off. This week now at about 5% discount. So the calls have swung all the way from over 12% premium to now a 5% discount. So at least for right now, the concern, the premium, the interest is not to the upside, it is to the downside. And in terms of action, it was the 80 calls out here this week, listeners. that were leading the dance. SEP 80s, 26, almost 27,000 of these bad boys going up this week. Pretty active all week long, even though about half of them, 13,000 going up yesterday, mostly opening. And then we had about 7,000 going up on Tuesday, slightly closing. So heading into the Fed, taking some powder off, maybe 4,300 on Monday opening there, and 2,500 today against an OI of about 21,000. So SEP 80s, we're at about a 76.5, 3.5 handles in about 2 weeks. Listener, you think that's doable? Certainly we've seen WTI move more than that. So that certainly isn't the most outlandish thing we've seen. Nothing along the lines of what we're seeing out there, what I should say Bloomberg is reporting out there in Brent with the 110s to 130s in November. In fact, if we go out to December, which is close in time frame to what they're talking about there in November, we can find our number 2 here, listeners, which is the Gies 85s. And again, Gies crude is at a 74.34 right now, listeners, so a little bit lower than our front contract. The Gies 85 is about 15,000 going up this week. Looks like kind of back and forth, opening about 5,000 on Tuesday, closing 3,700 on Monday, then opening 3,700 again on Wednesday. So we're all over the place here. 2,500 going up today against an OI of 26,000. So I don't think I would put the Gies 85s in the same category as the, what they're talking about, Nove 110s, Nove 130s, and Brent. I'm looking here to see if I could see any kind of crazy upside like they're reporting. We had about 6,000 of the 90s in Gies going up this week, about 3,000 of them today, mostly opening throughout the week. So Gies 90, that isn't that outlandish. We also have the October 80s going up about 13,000 times this week as well. So the 80-85 strike seems to be where a lot of people are lining up, and that makes a lot of sense. I mean, that's kind of a little bit north of where we're trading right now, but not outlandish. I guess if you want to look for outlandish, May 110s of next year going up 2,500 times. I mean, that's about as crazy cakes as I see here as I'm scrolling through all of this paper. We also have February. If you go to February, the pars are trading 2,200 times. Again, nothing in that November time frame. Let me tell you what, let me go pull up November really quickly as well, just to see. Yeah, we had 2,500 of the 110s in going up, opening on Wednesday out there for those 110s I was just talking about in May. In terms of November, let's just see, because usually if it's trading in Brent, there's a good chance you might see some similar related paper out here in WTI. And looks like, yeah, we have 80s, 85s, 83s, and 90s on the call side. Nothing crazy outlandish. I don't know, Rich, what are your thoughts on these reports of crazy 130 calls going up in Brent? I didn't see anything that crazy in WTI. Are you looking for, you think, maybe a little bit of aggressive upside in the near term here in WTI, sir?
Yeah, it's a great question, Mark. And I think there's obviously a lot of moving parts going on here. It does surprise me a little bit that people look at such extreme strikes. It seems like there's probably a better bullish idea to put on there if you want for a better reward to risk and probability. But of course, as we know, Europe is and Brent much more susceptible to supply disruptions because U.S. can produce its own oil. And so Europe, as we saw a couple of years ago, going into the winter, massive demand ahead of the winter. And so I think you could see that disruption impacting Europe much more. Of course, as you know, as you've been saying, Brent and WTI, the spread's not going to get too far out of whack, but you could see that spread widen a little bit just because of that. And I think it's hard, the other variable or that you have to consider is the election we have in November here in the U.S., right? Because people are expecting one candidate to come in and pump a lot of oil and the other candidate to ban fracking. So it's they say the polls are 50-50-ish right now. That's another thing that you have to kind of factor into that equation in WTI that you don't really have to factor into in Brent. So there's a lot of moving parts, but I can see why you might want to look at the upside in Brent more than WTI. But I would think that you could find a better bullish expression than going out to 130s in November.
130s. I'm doing a little bit of digging here. It looks like they said they were the 110, 130 call spread. So that's a little better than straight buying the 130s, obviously, but still Still a little bit aggressive out there. We got a little bit of time left on the show here, Rich. We've talked energy, we've talked crypto. There's a lot of things popping off this week. I mean, the equity markets appear to be melting down as we speak. We had, of course, the Fed this week, so the rates were active. They were at the bottom of our CVOL movers and shakers this week. Where should we go next, sir? What's catching your eye?
Well, I mean, the two things that are catching my eye, Mark, and you'll chuckle a little bit, but I mean, dollar yen. I mean, that's been a massive move in dollar yen strengthening, and that's leading to a lot of hedge funds having to delever and de-risk their portfolios because that's where they've been adding a lot of leverage is in borrowing in Japan. So dollar yen's been kind of interesting to me. And then as we talked about it, the big movers on the dark side, soybeans can't get out of their own way. Export sales are collapsing, yields are up. It looks relentless there. So soybeans are the other thing that's been kind of catching my eye as well.
I had a feeling you're going to lure us to the dark side of FX. All right, because Rich is on. I love when you're on. I get to use my FX drop. I get my value out of it. So to the world of FX, we go, listeners.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, everyone looks at rates, of course, during Fed week, but the other side of that also feels the impact is, of course, FX. If you go into that drop down, listeners, pop out of energy, go down 2 slots to FX, and we're going to go to the FX majors. And Rich was just talking about yen USD, so go almost all the way down to that product category to the yen USD, and that's where we'll hang our hats this week, listeners. That front future at a whopping 0.0067305 to give you all the decimal points out there this week. Up about 2.7% on the week out here, and doing some paper this week as well. Almost 47,000 contracts. This is not a Bitcoin. This is not a sleepy product that does 1,000 contracts a day. Nearly 50,000 contracts. That's nothing to sneeze at. Mr. Rich, you were just talking yen USD. I know you're an old school FX guy. What's catching your eye out there in yen USD during this Fed week, sir?
Well, I mean, not only is the Fed expected to be dovish and start cutting rates in September, but quietly the Bank of Japan's raised rates twice. And so that interest rate differential has been narrowing. And as I mentioned, the most popular place for levered funds to go source their capital has been in Japan because you could borrow close to 0% and the currency had been continually weakening. So your only risk is that the currency starts to strengthen. And in the last few weeks, I mean, you mentioned it's up to 2.7% this week, but the last few weeks it's up over 8.5%, which in a product that normally trades it on about 6 vol, an 8.5% move is pretty massive. And we're seeing the ripple effects of that throughout the markets. You're seeing short interest go through the roof in equities. You're seeing de-risking in a lot of different products, all because people are having to unwind and pay back some of the short-term loans that they have, all based in the yen. So while the dollar yen may not excite people too much, it's actually a pretty big mover for what we're seeing, and that's why I think it's really interesting. And that 0.06735, that's probably 148.5-ish. It's kind of interesting. If I think in spot terms, 150-ish is kind of where Bank of Japan was intervening the last. Towards the fall of last year, they intervened there twice, and we had blown through there and got up as high as 160, and now we're back below those intervention levels. So I think we're at some seminal levels in dollar yen, and driven not just by what we're seeing in interest rate differentials between the central banks, but because of the price action of the levered funds, which is, I think, a lot of what we're seeing in the other markets too.
I'm hard-pressed to find a lot of assets on the show, even on the network, Rich, that start with multiple zeros in the decimal point before they get to the price.
While they have stock splits in some products, maybe dollar yen needs a reverse stock split or something.
It might. It's getting to Shiba Inu territory at this point, a million zeros after the decimal point. But we're going to start out here, listeners. As Rich said, a pretty active week. Are we at some seminal moments in terms of dollar yen? Well, I'll let you folks determine that, listeners. Right now, of that 47,000 contracts, about 32% of it going up out here in the SEP contract that has about 36 days to go. So we're going to hang out there. You might be asking, what is the vol out here? Rich was just talking about how we had actually a pretty impressive move. A point and a quarter. Doesn't sound like a lot, I mean, we see VIX moving multiple handles just today, so you might say, what's the big deal? But in the world of FX, a point and a quarter is a pretty huge vol move. We're at 1143 in that SEP vol right now, up again 1.28 points this week. So that's a Volmageddon almost in the FX markets. In terms of skew, we're actually seeing some action out there as well. The puts 6.8% cheap last week. This week, 7.6% cheap. The calls, they were bid last week, almost 10% bid, 9.9% to be precise. This week, coming in a little bit, 8.3% bid. So some of that juice coming back in post-Fed. And in terms of action, I said we're hanging out on that future at 1,000,067,305 listeners. It is the 0.00645 puts. Bet you didn't have that on your bingo card, listeners. Lighting it up this week 2,400 times exactly, and trading pretty actively all week long as well. Almost 1,914 going up on Tuesday, opening there. 500 each Monday and today, also opening today against an OI of about 1,800, and 431 on Wednesday. So again, an opening palooza on these puts out here in September. And you know what? As I say that, I realized I missed one. Even though most of the action, the lion's share of the action was in this September contract, it was actually the October contract that has about 64 days to go that had the most active single option this week. They were the 0.0069 calls, listeners, and that future in October a little bit higher at 0.006815. Those went up nearly 3,000 times this week, and it looked like it was all in one trade. 2,970 of the 0.0069 calls going up Wednesday opening, and also 2,931 of the 0.0068. So it looks like we have a bit of a vertical going up out here this week as well. There's a very tight vertical. So, Rich, either of those float your boat, either the September 0.00645 puts or the October 0.0069, I guess 6968 vertical. Either of those floating your boat, sir?
Well, I think that honestly, the 0.00645 puts is kind of interesting because that's I think maybe people looking for maybe a re-weakening of the yen here, maybe thinking that this is just short-lived and overdone. So I think that's kind of interesting to see that, because I would not necessarily think that. And that's, you were mentioned collars and skew before. The skew in FX is always interesting because it's not stagnant. It swings around pretty aggressively, and you can get a pretty good sense of changing sentiment by looking at the skew. And so seeing that there's some interest in some volume on the put side, the yen put side is, I find that kind of interesting.
We don't talk a lot of FX here on the show, so is a vertical or a spread literally 1/10,000th of a point wide? Is that a normal? That seems like a pretty tight spread to me. Is that normal for yen USD, sir?
Well, I mean, I think you can look at those types of tight verticals as kind of digital spreads. It's kind of almost one-touch type of product. I know way back in the day, going back decades, we used to hedge the one-touch or digital exotic options with vanilla call and put spreads. So you can certainly approximate that there. So think of it as just kind of a binary event type of idea.
All right, and Rich put in a request for the Ags. So to the wild world of Ags we go, listeners.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk Ags.
All right, listeners, go back to that drop down one final time. Go into the asset class drop down. Ags, pretty easy to find. It's an alpha order list, so they're right at the top there. And then we're going to go to grains and oil seeds. Going to go 3 slots down to the soybeans, which, as Rich alluded to, having a bit of a rough time right now. Trading in that front future 1,008.5, off 33.5 points, or about 3.25% again just this week. If we go out to our movers and shakers, soybeans are off nearly 6%. They're at number 2. Soybean meal at number 4, off 3.75%, and soybean oil was our number 1 dark side mover this week. In fact, our largest percentage mover of everything at CME this week, off nearly 6.5%. So a lot of tumult out here in the soybeans, and you know what? They're reflecting it from a volume perspective right now. 355,000 contracts on the tape in the beans. So the beans are bringing it from a volatility and certainly from a volume perspective out here. Rich, what's catching your eye out here in this beans apocalypse, sir?
Yeah, it definitely is a beans apocalypse for sure, and I think corn is not too far behind it. And clearly, we're the fact that every month we've been getting data on the yields, and the yields are holding up really, really well, suggesting that it's going to be literally a bumper crop, and that's not necessarily good for price. And then you look at as I mentioned before, the export sales markets, and China has basically stopped buying beans from the United States. They're buying them off from Brazil. Global product, I know, but this lack of demand combined with extra supply is really putting a lot of pressure on corn and soybeans. And interestingly, typically when you start to see that much weakness and persistent weakness in the grains, you might think that you would be getting some weakness ultimately in cattle too, because that's obviously input costs. But cattle's been going the other way because we've had such extreme heat and drought situations in the cattle regions that cattle prices have been going the other way. They've been moving a lot higher, and so I think that there's a lot of kind of extreme price action in the broader grain and livestock space that I think is worth noting, and because it's kind of leading to some pretty painful moves for people in that space, including farmers, but also restaurateurs, et cetera, et cetera.
All right, let's break it all down here, listeners. By the way, what a wild week here on TWIFO. We kicked things off in crypto and Bitcoin, then moved on to crude, then into FX with yen USD, and now rounding it out here with soybeans. So we're doing a lot of living on TWIFO this week, listeners. You're getting your dollar's worth out here in terms of cross-product analysis. But to the world of the beans we go. Like we said, a banger week, 355,000 contracts on the tape. Of that, over half, 52%, going up out here this week in the November contract. So we will hang our hat out there as well. But that future is at a 1,016, so a little bit higher. In terms of vol, at about an 1810, actually off about a quarter of a point. So kind of interesting. We're seeing a bid to the front portion of the term structure, so the nearer dated stuff. Longer term, you're getting a little bit of a discount in terms of vol. So kind of a tale of two tapes out there. Very, very different tales in terms of the latter portion of the term structure and the front portion. Folks bidding up vol in the near portion and seemingly dumping it out here on the November and beyond here. In terms of skew, kind of a slight week on the skew front that puts 3% cheap last week, actually, which is kind of interesting given this price action we're seeing out here. You might have been forgiven for expecting a size bid. That puts this week 1.5% cheap. So again, not a ton of bids showing up in the little bit longer term beans. And also we're not seeing it really in the near dated beans as well. The most aggressive bid for the puts I can find here in the term structure, listeners, is in the 1 day to go contract. That has about actually that was 6% bid last week. That's flat now as well. So maybe at least for the near term, we're seeing a little bit of we're spent to the downside. At least that's what the options seem to be saying us. Last week, the calls were cheap, 5.4% cheap. This week, they've swung to about 2.3% bid. So that also maybe is telling us maybe we're finding a little bit of equilibrium here as we're starting to threaten the par strike out here. Also, probably not a surprise that it's the par puts out here in November, the 1,000 level puts that are leading the dance. As we're selling off, getting close to this psychologically important level, makes a lot of sense. We're seeing this one leading the dance. 24, almost 25,000 contracts going up this week. The big day was actually Monday, so kicking off the week in robust fashion. 11,300 contracts going up, mostly or slightly biased, I should say, really towards opening. And then we have about 5,400 on Tuesday, again, slightly biased towards closing. So we're seeing a lot of back and forth paper, which again makes sense. It's the par strike. People are going to be going both ways on that one. 3,800 today against an OI of 34,000. 3,900 yesterday, slightly opening. So it seems like we've been mostly back and forth all week long on these par puts. I think that's reflected in what we're seeing out there in that kind of close to flat skew we're seeing out there now as well. So 24,000 of the 1,000 level puts is kind of leading the dance. Then behind that, we have a bit of a tie, a three-way tie actually almost for third between the 1,100 calls, again, going out in November, doing about 10,000 contracts, almost exactly 10,100. The big days, 4,000 on Monday, slightly closing, and 4,300 today against an OI of about 7,800. We also have about 10,066. So 10,000 and change is the magic number in the beans this week, listeners. 10,066 of the 980 puts also in November, also mostly biased to Monday and today, 4,100 roughly each, closing on Monday. Today's OI against an OI of about 8,000. Then we have about 10,000, almost exactly 10,100 of the 920 puts. Most of those going up on Monday, about 7,200 and about 2,200 today against an OI of 4,300. And if that's not enough, we also had 10,500 of the 1,100 calls. These are nearer dated. These are September, going out in 22 days. And they did 10,500 contracts this week. Again, the big day was Monday, 5,600 on Monday, and 3,000 today against an OI of 7,200. So a lot of paper lighting it up out here in soybeans, Rich, with most of it coming around the par strike. Any surprises or anything making you stroke your chin and say, to that, sir?
Well, I mean, it kind of goes back to when you started talking about the CVOL at the start, and the ag CVOL was at the highs of the week, and I think you kind of highlighted here the CTA money has been kind of short corn and soybeans this whole move the last several months, and seeing the vol near the high of the week, and now seeing that the maybe probably more put selling than buying for sure. To your point, maybe people who are short are just starting to underwrite their positions and take in some premium and start selling some puts, looking at a way to kind of ultimately maybe take profit on their short, or if we sit here and do nothing, take in some premium. So I think, is it near the end of the move? I don't know, but certainly when you start seeing shorts underwriting their position by selling some puts and taking some premium, that suggests maybe some consolidation here, which farmers would probably love to hear. So that to me is kind of an interesting one when we start to see people, looking to maybe reduce some of their exposure a little bit that way.
All right, Rich, that music means we have exhausted the TWIFO reports this week. Couple of complexes we didn't get to. We got to most of them today. Didn't get to rates, didn't get into the hinterlands of the metals this week, but really we hit on most, no equity surprisingly this week as well. But outside of those, we hit on a lot of the complexes. Of course, if you want to see what's going on in any of your favorite products, listeners, cmegroup.com/TWIFO, and you can run these reports whenever you want until your heart's content. You want to run corn at 3 a.m. on a Sunday, no one's going to judge you. cmegroup.com/TWIFO, the place to go to get that action rolling. And Rich, where should folks go if they want to check out all of your reports or indeed your Excel with options columns, sir?
Absolutely. You can go to cmegroup.com, sign up if you go under Insights, you'll see the Excel with options there, and you can sign up to get that report. Comes out bi-weekly, get it sent right to your inbox. Teaser here, we said we didn't get to metals today, but I do have a report on the metals that'll be coming out next week. So take a look for that, because we don't want to leave the metals out of the discussion. And then if you're just kind of interested in kind of following me, either on Twitter at Excell Richard, or go on to Substack at stayvigilant.com or stayvigilant.substack.com for more of kind of the macro thoughts of what I'm thinking about all these different complexes.
I know you're looking forward to really spinning up the Derivatives and Trading Academy. Is there anything there for people who aren't students? Can they go to the website and maybe get some articles, or is it all exclusively for the cool kids down at U of I right now?
Yeah, right now it's all for the cool kids, but the idea is to kind of spin that into, for lack of a better word, executive education with some of the same content put out in online at some point. So to be determined, but it's definitely in the works, and we'll get it at some point.
There you go, listeners. So in the meantime, you can keep track of everything he's got going over there at Excell Richard, EXCELL Richard, all one word. Or his handle, just stay vigilant over there on Twitter. Good advice for these markets as we are rocking and rolling seemingly every day. That is going to do it for the TWIFO program. That's usually going to do it for the network today. Got a little bit of surprise bonus for you pro folks, though, anybody hanging out in the chat right now, because I'll be back in a little bit to do an early edition of Options Oddities. Yeah, I'll be traveling after Vol Views tomorrow, so no time for it tomorrow. So we're going to be doing it early in about 30 minutes, so stay tuned for that. A little bit of a bonus fun for you folks. Of course, if you're listening on the pro side, you can always get it on the pro podcast feed as well. If you want to learn more about all things pro, theoptionsinsider.com/pro is the place to go to learn more. So I'll be back in a little bit for Options Oddities, and we're back again tomorrow, myself and the Rock Lobster and Dr. Bix in hand, earlier than usual. Different bat time this week, same bat channel though, for a little bit of volatility views. Then we're back again next week, kicking things off with the option block all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.